Good evening. I hope you all had a great day. Today's trading was very choppy, as the Dow was trading up more than 800 points, but ultimately ended the day a bit less than that, as it ended the day up 1.9%. The S&P followed suit with a choppy day of trading, as itself and the NASDAQ both turned negative. Regardless, the S&P ended the day up 1.31%, while the NASDAQ ended the day up a slightly less 1.01%. Needless to say, it was a rough week for the markets, as the Dow and S&P ended down more than 4.5% on the week, while the NASDAQ lost a slight 2%. Quote, "The stocks that are up the most from the lows are still the risk-on, high-beta, value, small-cap stocks. They're still the big winners, and I would suspect that there's more pain to come near term before the market clears out kind of this excessive speculation that we've seen recently," said Morgan Stanley Investment Management's Andrew Sliman. Note that Wall Street's fear gauge signaled more wild trading ahead. The SIBO Volatility Index rose to its highest level since April and traded above 43. The CDC announced today that the United States may need to implement strict coronavirus safety measures if cases go up dramatically. Right now, communities are experiencing different levels of transmission as they gradually ease up onto the community mitigation efforts and gradually reopen. Quote, "If cases begin to go up again, particularly if they go up dramatically, it's important to recognize that more mitigation efforts such as what were implemented back in March may be needed again," said CDC's Deputy Director for Infectious Diseases, Jay Butler. Although it's unclear what would be considered a dramatic rise, some states are beginning to see an increase in cases after they lifted stay-at-home orders and reopened businesses that were shuttered for weeks due to the virus. Currently, there is a concern by public health experts that some states are opening prematurely as U.S. job losses continue to mount and pressure grows on state leaders to allow people to go back to work. On top of this, the CDC published results from a survey which found that a majority of Americans said they would not feel safe if social distancing measures meant to curb the spread of the coronavirus were lifted nationwide. To demonstrate how irrational the market has been over the last few weeks, shares of Hertz, which recently filed for bankruptcy, rose more than 70% this morning, after announcing that it plans to issue $1 billion in stock. Quote, "The recent market prices of and the trading volumes in Hertz common stock potentially presents a unique opportunity for the debtors to raise capital on terms that are far superior to any debtor in possession financing," the company said in the filing, which the court is yet to make a decision regarding. Hertz said the net proceeds would be used for general working capital purposes. The filing was on, quote, "emergency basis given the volatile state of trading in Hertz stock." The good day was felt by everyone besides utilities. However, they only suffered a minuscule loss. Financials, oil and gas, and basic materials all had the best day, with financials and oil and gas gaining more than 3% on average. Small caps and value all had the best days, with small cap value specifically having the best day, posting a gain of 3.17%. Mid cap value wasn't too far behind, gaining a nice 2.73%. and small cap core stocks gaining 2.31%. The largest gain came from heavily volatile United Airlines, which gained slightly more than 19% during trading today, capping the week off nicely, but still taking a large loss. Airlines as a whole moved up a lot today, on news that American Airlines is said to be targeting a zero cash burn rate by the end of 2020, as demand conditions continue to improve and cost initiatives continue to gain traction. Next up is Norwegian Cruise Lines, which has actually been on this show every day this week. Congratulations, Norwegian. Anyways, they gained 18.84% during trading today, but are still taking a big loss in the week. Popular retail stocks, which have been very volatile recently, such as cruise lines and airlines, all gained the most today as a whole. The biggest loser was PVH Corp, which owns popular brands such as Calvin Klein, Tommy Hilfiger, and Heritage Brands. Today, PVH moved down 5.9% after they missed on both EPS and revenue estimates. PVH missed non-GAAP EPS estimates by $1.36, as they came in with a loss of $3.03 per share. Revenue was also dismal, as they missed estimates by a slim $10 million, coming in with quarterly revenue of $1.34 billion. This was a decline in revenue of 43.2% on a year-over-year basis. The other biggest loser was ONEOK Incorporated, which is a natural gas company. Today, shares were down more than 3.5% after they announced that they would be offering 26 million shares at a price of $32 per share. This would net ONEOK gross proceeds of approximately $832 million. They did not say what the capital would be used for. ONEOK recently has lost a third of its market cap and has received a lot of bearish comments from analysts. Bank of America downgraded the stock, and a Morgan Stanley analyst moved their price target to $27 from $29. Getting into earnings, we start off with FuelCell Incorporated, ticker symbol FCEL, which is the biggest publicly traded fuel cell manufacturer in the United States, and which is up an astounding 537% over the past year. Today's earnings were very good for FuelCell, as they were in line with EPS estimates, coming in at a loss of 7 cents per share. The real treasure came from the revenue growth, which soared more than 105.4% on a year-over-year basis, to a total second quarter revenue of $18.9 million. FuelCell Energy started the day up 23.1% after their earnings were announced, but ultimately, they ended the day up slightly more than 7%. Lastly, we have Party City, ticker symbol PRTY, which is a retail chain of party stores. Party City had dismal earnings, which was expected to be the case. Regardless, Party City took a loss of 28 cents per share, which was lower than estimates by 7 cents. Revenue also fell short of estimates by $25.85 million, as Party City collected revenue of $414.04 million for the first quarter of 2020. This represented a decline in revenue of 19.3% on a year-over-year basis. Party City lost a total of 112 stores on a year-over-year basis, as their total now stands at 854. They are planning to close an additional 21 stores, but open up 2 new locations. Currently, 85% of their stores are open. Shares were up more than 9% after their earnings were reported, but finished the day up an even better 25.35%. That is all I have for today. I hope you all have a fantastic weekend, and I will see you again on Monday.